Hello everyone, welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. Glad to have you with us here this week. I'll kind of move into the slide this week. The Fed is meeting this week to kind of talk about what they're going to do this next year. As many of you probably can tell, the market has been on a really nice run since the beginning of November. August, September, and October were kind of brutal. Kind of lost a lot of what our growth for the year was, but now we've kind of overcome that. It's doing very well. A lot of that's because the Fed is going to be making some decisions on what's going to happen this next year. This chart just kind of shows the JOLTS quits rate. What the quits rate is it's the percentage of people that quit their job versus getting laid off. So we kind of the Fed kind of keeps an eye on that and say, well, who's quitting their job? What are they trying to do? What are they trying to get out of this? Are they trying to get more income? They track that with wage growth as well. This year, the markets and the Federal Reserve have repeatedly danced this tango, with markets moving forward in anticipation of early interest rate cuts and then stepping back to realign with Fed speak, so to say, on inflation and the labor market. As the year draws to a close, though, the dance has resumed. It looks like they're going to have to cut rates starting this next year. Last week's labor data painted a nuanced picture. While job openings fell by more than expected to 8.7 million, non-farm payrolls rose by about 199,000, bringing the unemployment rate down to about 3.7%. But that wasn't really unexpected, because with the return of auto union workers to the workforce, people expected the unemployment rate to go down a little bit as well. So you can see the quits rate. The wage growth declined about 4% alongside the quits rate, which has softened gradually from its April 2022 peak. So really what we're trying to figure out is what's going to happen this next year. What's going to happen to the Fed? Are they going to cut rates? And for the most part, most people believe there could be as many as 4 or 5 rate cuts this next year. Now, what does that do for us in our portfolios? Number one, as the Fed makes changes to the interest rate, people can borrow money. They're worried about the economy dropping. They're worried about, dropping. We're worried about the economy slowing, for lack of a better word, and they want to make sure they can kind of speed that up. And so as they've raised interest rates over these last year and a half or so, they've slowed the economy down, trying to slow down the inflationary pressures. And now they're looking at, okay, at some point this is going to give, and we've got to start cutting rates. And so a lot of the things that are happening right now are people looking at this saying, hey, I want to make sure that I can continue to borrow money, grow my business, do things like that'll help grow the economy. And the Fed wants to make sure that as pressures get on those employers where they can't hire anymore because of wage growth, whatever, they'll say, hey, let's cut some interest rates. Let's get people to continue to invest in the economy and move the economy forward. So that's kind of the things we're looking at here. For the most part, we still see 2024 to be a good year. 2023 appears to be closing out as a great year, and a lot of that has to do with the continued wage growth. And what's interesting is even with the wage growth, we're still below where we were prior to the pandemic. So wages are coming back, just not quite as fast as we'd want. So that's about it for this week. For the most part, just be aware that if the Fed does start cutting rates this next year, that'll be great for those of you holding fixed income securities, because you'll get a pop on those. And those of you who are looking to borrow money for expansion and other things will be able to pay lower interest rates as well. But it'll also actually help grow the economy as well. As usual, keep us posted. If you have any questions, feel free to forward this to any friends or family members. We look forward to meeting with you, and we look forward to our spring reviews. Thanks.